All right. Welcome back, everyone. Let me flip the screen here. Boy, that got messed up. Let me flip it back. There we go. So essentially, I'm having a fill-in for Matthew this week. He's out today, but he'll be back on Thursday. And then on Thursday, I'm going to try and see if I can get Howard Greenberg on the show. We're going to talk a little bit about some crypto stuff with Howard and Matthew together. But right now, we're looking at some other themes in the mining sectors are kind of standing out to us as well. And I have Marzidi filling in for Matthew today. Those are some big shoes to fill. But we've kind of got some stuff to follow up on from our last week's series of call-outs because we freaking nailed it. This is 4 weeks in a row at 100% accuracy. Thank you very much. We're going to look at a couple of things to follow up for next targets. So we'll resume looking back on some stuff to find new targets. And then we got a couple things that are popping up as far as things to focus on to kind of keep an eye out for next setups. First, let me get on the big screen here, and we're going to go into Q just briefly here. And I'm going to give some secrets away, so kind of watch this one and tell your friends because there's going to be some fun stuff here. Let me go to the daily chart first. So in the daily range, we've got a pretty good idea where the high and low and the mean are. So we have, this measured move played out, gave half back, hit the targets. We were all over that. That's easy. Right now, we have a critical support area where we could make a quick half back on the previous trend. Worst case scenario, if CPI stuff comes out bad this week or what have you, half back's pretty much the goal. So, I mean, we could go anywhere from like 515 to 510 pretty readily. And it wouldn't be a big deal. It'd be just a pullback. We expect those. But we also have a chance where we do have quite the rally behind us here. And this is what I was talking about with our members this morning is this is one big diamond pattern at the top of a range. These are neither reversals or continuations, but they always precede volatility. So if we get some bad news, it gives us a great breakover and you end up with a bunch of targets. I'll finish drawing this later on. We'll get the extension targets, but just look at the pivots. They're right there. 515, 510, same. So if we start breaking over bearish, we know where the bears will take it. Pretty easy stuff. Some people look at these as a triple top. I just look at it like a consolidation pattern like any other. It's got the 60-40 rule. It'll either break out and follow through or get rejected, whatever.
Looking at a trend line there, if we go back to July, at the high in July, and then we go look at the high in on November the 4th, we've got us a nice trend line that shows that we have broken across it on the weekly here in the 1st of December. So this looks like a break, retest, bounce kind of scenario. So that does look like a significant trend line to me. So I do think that we are, breaking into new territory or will fail and come back inside.
Good point. And that's kind of right in line with when we see these patterns. They usually, precede volatility, and either side of that is volatility. I mean, we got previous trend was pretty steep there. It was pretty much parabolic for a while there. So big moves can happen. We'll just have to wait for that shoe to drop and trade the break on this one. We always say that. Don't trade the setup, trade the break. But you can scalp the setup, and that's what we do a lot in our live streams in the morning. And I'll get to questions in a moment here. I got a couple of them up here. It looks like, oh, hey, Sig. Yes. IVG, QQQ, and SMH, QQ as well. Money lines up. Yeah, the trend is still generally bullish. We've got, pretty good idea of continuing this massive parabolic move, but a pullback would be appreciated at this point. So we do see the same thing the same way. Going into a couple other things that we see with Q here is that we also have easy measured moves to trade, and we got this, liquidity zone. It just sticks right out like a sore thumb here. If we crush this and we break B here, it's an easy measured move down. We get, halfway down here to like 518 or so. If things get really bearish for that break, sure, we can hit 515, but look left. There's a gap right here, guys. It's pretty obvious. So 520 to 518, pretty reasonable move if we break this zone. I think we're probably going to hang out here and wait for data to come out. We got CPI and jobless stuff, and whenever the Fed comes out with stuff, things tend to boogie. And then we got bill auctions and all the other happy stuff. So I think we're going to see some good volatility. And yeah, it is a bit like the old head and shoulders pattern as well. So I take a bias to those as well because I just trade the break. Whenever I see an H&S pattern, I know everybody sees an H&S pattern. And I think, like the market makers do, well, where would I like to take advantage of liquidity from what everyone else thinks? What do I know as far as the market goes? Where are the themes taking us? Well, the trend is still generally bullish. Kind of put that together and you just decide, I don't have to fall for any traps. I can just trade the break and ride the momentum. So call yourself a momentum trader. Pretty simple.
Yeah, well, another thing too is you can always start with a small position. That small position gives you a lot of wiggle room, 10, 20% movement. But at least you've got your foot in the door with a very small position that you can afford. And then when, if it does make a big pullback, you can pile into it. If it takes off and rips, okay, you're able to capture some gains.
Exactly. And then just follow the rules, half and whole. You can have a modest position for something you expect to be a half target. And if you're really confident in a full range move, you can put a little more weight in it. You can also average up. I never average down. It's my rule. Never, ever average down, with an exception to selling options. But when I am in a trend and I have more confidence in it continuing, I can always average up.
Well, see, I'm quite the opposite in that regard there. I like to average on the pullbacks. Now, it may be averaging up my cost basis, but a lot of times if I take a starter position just to get going with it a little bit, and it's not a lot of money. So if I lose half, 20% of it, I'm not going to cry.
Right.
But, at least if it's on my board, I'm watching it. If it takes off parabolic, okay, I'm going to catch some of that. But what I'm really hoping for is, that pullback below, let's say like the 50 EMA or the 50 SMA rather. If it hits that and I still feel bullish on it, I'm going to pile on to it. For me, that's been a good strategy. But that's me.
That's, you can average up on a pullback too. And that's exactly, what we're saying. So
yeah.
In a sense, like if you're trading a trend and your momentum starts to give you a pullback and you're still confident in the trend, you can use that as just a tool to average it. You can also go and take risk off at the top at a rejection, and when you're expecting a pullback, take a portion of your position off with some people will go 20% off, other people will go 40% off, whatever it may be.
Yeah.
And then you can just compound the risk back in the same risk. So you just average that position higher after taking some profit off. So
the 21 EMA on the Qs right now is 512.5. So, and we've hit it numerous times, sometimes go a little below it and stuff like that, but we haven't hit the 50 in a while. The last time we hit the 50 was back in September. So, and we were in a bearish cycle at that time. So the 21, like I say, at 512.5, really, as long as we're above that, I think we're good.
The trend's still pretty strong. It's you said 21 EMA. I usually just use a 20 simple, but same kind of. I like to use it because it's essentially the central Bollinger Band, and you can see trend pretty readily with just a 20 period. I love Bollinger Bands, but I also love a clean chart. So I reference things in a different manner, but it works the same.
Oh, yeah.
As for other stuff, I rarely use the 50 period, but I do recognize, it's been trending along that 50 so well that it's like, okay, if we get a pullback, I'd love to see it touch it. But for now, I'll just keep riding what I see. Anyway, moving on, let's get into some equities. You mentioned a couple, and I'll go over those. I got a couple to review later, and a couple I'm going to add. So I'll start with your view on GDX there. Interesting chart.
So I look at the GDX because one of the technical indicators I've been looking at lately that I've really been impressed with is in the Thinkorswim linear regression slope. It's all one word, linear regression slope. It's just a formula. And you can get Copilot or something like that to convert it to whatever your charting platform is. I did get a conversion for TradingView. But the reason that I'm liking it, or got my eye on it, I should say, is the linear regression slope is an oscillator. It hovers around zero, plus and minus. It has crossed down. It's turned around. Looks like it's about to cross back up. And when I look at the TTM squeeze, it has not gone through a squeeze, but the squeeze has turned positive on it. So from an indicator standpoint, there looks like there might be something to it. Now, the flip side to it is that the weekly is still bearish.
Right.
So this would probably be a scalp. I don't know that this is going to be a buy and hold right now because it got really overextended on the weekly, but on the daily, it looks like it may be turning, possibly turning bullish for a while. And we do have a 50% halfback from December 22nd as the top to November 14 at the bottom, and a halfback putting us somewhere around 39.8. We'll call it 40 for easy math.
Yeah, I was looking at that too.
There's a little bit of room and profit in there, just to see what would happen. So it's not a hit out of the park, though. It's not that yet, but we'll see.
It's a decent little swing, and the options chain is workable on that. Where yes, it doesn't have as much volatility, but the moves are pretty smooth, and you got plenty of time you can afford, so you can run quite a bit of DTE on that. Looking at just a standard, when you see a high and a low and you split the difference, you get a reversion target. I landed right on $40.20, a little upper edge of this consolidation.
Okay.
But it's already on the map. So, I like the idea. And if it breaks out of this range bullish, I mean, it's got a pretty easy move to spot in there. And then as far as scalping it goes, if you grab kind of split the mean, I love drawing these stupid simple boxes. They just work so well.
Yeah, sure.
It's my own kind of take on the Davros box theory, but it works very differently than that. That looks at what you're looking at for an estimation, whereas I'm looking at it for just a specific move that it can make, and then just apply a half and whole. You can see half hits exactly where the previous resistance was at the top of this wick. So if we consolidate here, split the range, you get bull targets. So conservatively, we got 39.60. I think you mentioned that number. And then half the block is right there, about 38.90. So
yeah, I mean, it's starting to look good. And if you love technical indicators, the Ichimoku is starting to turn bullish on it as well. The Tenjinsen is about to cross the Kaijun, and I know, unless you know Ichimoku, none of that makes any sense whatsoever, and I get that. But the point being is that it is showing bullish potential here.
I always say, I mean, everybody has their own take on technical analysis, and it's important to focus on whatever works specifically for you. I dumb things down so much. That's what works for me. I like high-speed analysis, and I love scalping like a 1 second chart or a 1 tick chart on Renko, for God's sake. So I just love simple because it's fast, but it doesn't work the same for everybody. So I always encourage, learn as much as you can about all kinds of different stuff, and then dumb it down for yourself, and then you'll find your trading efficiency becomes a lot higher. And when you're talking about stuff like that, I don't glaze over. I understand it. It works. But what's cool though is having an understanding of how all those different indicators work, and you start to notice that when you get the majority of them all pointing at the same thing, that's where you get your edge. So if you get the idea of being able to take bits and pieces of different indicators and put it together to find your signals and then just compare to price action, now you can verify. So you can put the trust but verify scenario into your chart. And
I agree. Price action always rules, and just understanding price action itself. Ultimately, most people, if you learn price action, you don't need most of these indicators. What I like about certain indicators is because it's easier to run them through a scanner,
right,
real quick to find stuff. And just because an indicator says go long, doesn't mean I'm going to. Because a lot of times these scanners will get tripped up, like they had an earnings call and the stock jumped 5%, and that triggers a bunch of your scanners,
right,
saying, "Oh, this is a great buy," and you look at it like, "Oh no, I'm not touching that with a 10-foot pole." You still got to do your due diligence and learn your price action.
Right. And speaking of that, sometimes you get a situation like last night. I was asked about AI and where I thought the earnings call would do. I said, well, the reversion target is 48.51. All I did was look left, and comparative market structure says exactly where that's at. You know where that resistance is. It's been there before. There's a consolidation there. And when you throw an earnings call in the mix, sometimes you just go straight to that target and reject and then give half back. And then you realize, that's not a sometimes, it's a very often time.
Yeah.
When you get that kind of information on the chart and it's telling you where it's at, and it's already given half back of the whole move right now, right into the open.
Wow.
I mean, that's a perfect scalp, really simple. Can you sell edges on that? I bet you probably could have got a nice premium for a $48 covered call on that pretty much right before the end of the day and just killed it. So, and if someone wants to early assign you on that, hell yes, you took your profit and got paid to do it. So sometimes you get those scenarios and you know where the edges are. That's where you can play your options selling strategies very, very well. And then, it was kind of funny to just be able to glance at that chart. And I didn't even have access to my computer when I was asked that question. I glanced at it on my phone, and my phone has Webull on it. It's great for charting. You can use it on your phone pretty well, but I don't like to take the time to sit there and drag the screen with my finger or move indicate drawings around and stuff.
I can't do it. I'm an old fart. I just can't do it. I'm like, yeah, you got a magnifying glass there. I can't see the freaking thing. Yes.
I can do it, but it's like I lose patience with it. I don't have time for this crap. I got things I got to do because I'm out and about, So I'm just like, well, I can see that there's an obvious reversion target right there. And I came back home, threw it on my computer. I'm like, yeah, it's the same. Cool. I had a glance. You get enough time with price action, you can glance at the chart and sort of know where it is. It's almost like your lizard brain just says, I know what I'm looking at. Come on. Don't play games. Let's look at a couple others. So you also had, what was it?
Oh, what was it? I forgot what it was.
HMY? I've got to put it in a list.
I got to figure out how to get back to our chat. Hang on.
I think it was HMY. Yeah.
Yeah, HMY. Okay. So this came from a scanner. Let me see why. HMY. Harmony Gold Mining. There's another gold for you. So what am I seeing here? I'm seeing that on the weekly, we have bottomed out on the linear regression, and it's time for us to turn and go back north. Not to say that we will, but possibly. The MACD on the weekly still does have room to fall. On the daily, we've got a low target here of $8.54, I think it is, for a liquidity grab that was set back on November the 18th. The linear regression possibly turning up. The TTM squeeze is pointing up. This to me is a very, very small entry. Stick my toe in it and then look for us to take that liquidity. There's another liquidity point. That November 15th is really our biggest liquidity. And I'm thinking if we get down there around that $8.54, that might not be a bad entry just to try to see if we're going to grab a liquidity there and then go back north.
It's a good point. It's tightening up in range, and typically, when we see it compress like that, it usually makes a big move. And you can see the wedge forming here. I got the wick party sticking out of it. I simpled it down quite a bit on a daily. I just went, okay, well, here's our high, here's our low, here's our reversion target, and then we got this double bottom. So, I always mark if L1 is equivalent to L2, and you can see the liquidity zone there too. But bottom line is you get the low, L1, R1, mean, L2, return to mean. So this is where we're going to watch for consolidation, and if it breaks out to the north, first target's right here, about 990. Second target, 1040 for reversion. And it's funny. You can go and simplify it, or you can complexify it. I don't know if that's a word, but in the long run, it kind of falls into the same old thing you've seen 1,000 times. A nice little double bottom after a little decline in the trend. Okay, we got price targets, so I'll keep an eye on this one. I like the measured move takes us right to R1 too.
I'm seeing a lot of names. I'm seeing a lot of metals. I'm just seeing metals all over the place, silver and gold. And a lot of this has to do with the fact, strangely enough, that President-elect Trump is pro-crypto. And you say, well, what does that got to do with metals? Well, metals and crypto are both considered safe haven type places a lot of times. And so we're seeing that gold is going up. Silver usually follows. But we're also seeing that crypto is marching up. And there's a lot of debate on whether we're into altcoin season or not. Some people say yes, some people say no. But the point being is that from what I'm hearing is that a lot of people are very bullish long term on crypto and gold and silver. And they're saying it has to do basically because, like I say, that Trump's coming in and he's going to be pro-crypto.
Which makes sense. And the metals follow it. And I was just putting a comment in the chat there. We're metalheads, yeah. We can be metal. We adapt our personalities to the market. That's kind of what we do when we're looking for themes. We just kind of figure out where we use our personality to discover what we see as a theme. We look into
what's being talked about, what's being focused on. I did a lot of starter positions there is a if you're not wanting to do the Coinbase, Kraken, Robinhood kind of thing as far as your crypto, there is one ETF you can always explore, and it is BITW.
Yeah, we were talking about that earlier.
BITW is an ETF that holds the top 10 crypto. So you've got your Bitcoin, your Ethereum, your Solana, your Cardano, all that kind of stuff in an ETF that just holds the whole thing. And so that's always something that you can look into if you like just staying on the safer ETF side.
That's actually setting up for a reversion scalp. So watch for a bounce off of 62 and a return to 67. That could be an easy money maker move, I call it. And then getting into all the crypto stuff has been pretty easy to scalp when it's volatile like it is. And comparatively, let me go to Bitcoin real quick. And I'll save some more crypto stuff for our good friend Mr. Greenberg on Thursday. But just a brief thing. Last night it was everybody's like, "Oh my gosh, what a sell-off!" And I'm just like, "Oh, it's a simple measure move, primary, secondary." I had my support lined up around 95.8. It blew through it. I mean, hitting 94.3 or whatever. But when it started accumulating on the 1 minute chart, right in that area, it was an easy scalp back for a reversion trade. I mean, it's just bam, right there, and rip it off. Goodbye.
I was watching somebody last night that were talking about the fact that if you're used to stock trading and, you see a daily 2 to 3% and you're like, okay, that's fairly normal. Well, Ethereum yesterday, or was it yesterday or was it? Yeah, I guess it was yesterday, did a 14% move, I think they said.
Yeah.
And they said, if you're used to crypto, that's normal. If you're not, you're in shock. You're stunned. You're like, what just happened? And, I mean, it's the nature of crypto. It's a roller coaster.
It can rip your face off. But then there's crypto futures. Bitcoin futures are awesome if you get really, really nimble with it and you start to. I mean, I've done it, on some really short-term charts. You get into scalping those, it can the amount of margin you need to trade the full-size Bitcoin contracts. Forget it. It's a lot of money.
100K. Yes, 100K is outrageous.
But you get into the micros and like, $25. Go grab a fistful of those, and you can average them in and average them out on trends and do whatever you want. And the commissions aren't too bad.
Well, they run on the weekends too, don't they?
Yeah. And you can get in there, make your move, get in, get profit, get out, and it's you get into some big moves like this, and you can make some money happen. So if you pay attention to nothing more than the Bitcoin volatility, you can avoid all the sideways crap and just pick off these measured moves real fast. It's a quick moneymaker. You get really good at it. It's
so if you get insomnia on the weekends, you can just come in and trade micro Bitcoin.
If you feel you must always be trading, then yes, yeah, that works out.
I've been in those phases before. Yeah.
Oh, we've all been there. Looking at a couple other things, and I want to get into one that I added to the watch list here, and then I'm going to also get into some of the themes that Matthew was pointing out with this too. But one I added was NFE. I talked about with Matthew. He missed the move on this thing. I think it's got another move in it. Just to kind of reiterate here, this is rotation happening here. It's right back into the base of market structure. This is the first wave, so to speak, of market structure moves.
New Fortress Energy?
Yeah.
Okay.
And slow short-term reversion target, $15.92. Easy move. 22 would be the double from where we talked about at 11. I mean, that's a full reversion of this whole trend here, right to about the middle of consolidation here as far as I can see. And it's just been such an easy trade. So if you missed out on getting long on this thing, this little pullback we got at the top of this, easy. Bounced right to about the halfway mark here and just instantly printed a nice tweezer bottom here. Great pullback to average up on. I was able to take my profit off on this and waited for this, and then I got long again. And now here we are ripping through a full 1.5 measured move is likely. So I'm going to put a short-term target up here.
Yeah.
We're looking
I'm
for
seeing on the
1370 for the short half move here, the 1.5, and we're lined up right now with an accumulation finishing today. If we break resistance here of 1325, pretty easy shot to 1370. And outside of that, if this thing continues to move, this rotation is strong. It's fairly parabolic, so be nimble. Breakout targets are pretty easy. 1470 and 1590. Pretty easy marks on this one, and it's nice and volatile. It's getting lots of attention, maybe because we were talking about it. I don't know, but I trade a chart.
Yeah, I understand. So looking at the weekly on it, the weekly just crossed linear regression north. That's good as far as a longer term. So NFE is a gas. I'm looking here on Seeking Alpha.
Gas infrastructure.
Gas infrastructure. Okay. And so the weekly is turned north. That's really good. The daily may be a little overextended now, but, we'll just have to see. 25 is a good measured move, is a good halfback over the last
entire.
Yeah. Well, a long period of time. So your daily Ichimokus, if you like that kind of stuff, really good indicator there. It just broke north of the red cloud. The squeeze linear regression says on the daily it's a little overextended, so I would expect some pullbacks. But the weekly just looks fantastic. And so 25 is not a bad target.
It's a really nice chart.
Long-term buy and hold.
Oh, for sure. I mean, this reminds me of that move I made a couple years ago on UNG. I mean, it was just almost the same thing. It was just a rotation off the bottom and then just trended on up. Gas futures hit like $3 pretty quickly here, tested it, pulled back, hit it again today. You know, the infrastructure stuff going into it is always going to be a little bit lagging of the trend, but here it is. It's picking up steam. It's rotated. Matthew and I, we got in ahead of the nuclear theme, and when that started paying off, everybody started pulling profit off. The next thing was gas, and we rode all the gas, basically the producers, and killed that too. And here we are now. The next one, obviously infrastructure. They're going to make money on this too. That margin of transporting from A to B, or processing or moving or distributing, whatever it may be, that's where it's going to go. So next, once this pops off and hits the top, well, UNG is probably going to be the one you might look at possibly shorting a scalp on. Maybe. I don't know. I haven't looked at UNG in a little while. Let's have a look right now. Ugly choppy chart. And as Matthew would say, this thing is broken. It's the most broken ETF that there is out there, really. Yeah, once that hype's over, it's going to be let's sell it and continue this trend move. But if it holds here, I don't like being bullish on this thing because it is the Widowmaker. It's been called that for a reason. You know,
every technical indicator I've got is negative here.
Yeah.
Every technical indicator I've got is bearish.
And look at the move behind this consolidation. I mean, there's strength here.
Weekly is bearish. Daily it looks like daily it may be bottoming out and starting to turn back. So a short-term reversal north. The squeeze is south. The Ichimoku is south. I mean, there's nothing good to like here, unless you're,
right,
going to option maybe the $10 put, but
yeah, this is one of those where it pops up. It's like whack-a-mole. You just start buying puts. It's very similar to UVXY. We just, don't short it directly because it's the Widowmaker, guys. But you can define risk and trade some options on it. My old dope here got shifted. I was just pointing out, like, man, that looks like crap. That must have been my chart nasty phase. It was. Now we're cleaning up our charts a bit. But, yeah, essentially this is still looking pretty bearish in general, but just be aware that this thing can give you weird pops here and there for just out of stupidity. It kind of is.
That's what happens when you have gas. You have those little pops.
Right.
Pops and poops,
Yep. Been there. One I added recently, and this thing's been on a tear. Might be a bit late to talk about now. I should have got this out on Tuesday's show, but it was late in the evening when I discovered it. SSRM, man, this thing's been just ripping. I noticed this when I went down the street to take a little bike ride. I started talking to one of my neighbors who was in NEM, and he asked me some questions about NEM, and I started looking at SSRM, and I realized, hey, NEM is selling properties to SSRM. SSRM, as we know, had that massive accident where the landslide took out their big mine in Turkey. That's this big red bar here. It's done the market structure thing. It's accumulated in range. It made some attempts on resistance. Eventually it broke. And here we are in a trend zone. If we retrace this whole thing at 950, pretty easy reversion target. So far, momentum has taken us out of this measured move we talked about earlier and continuing to rip. Can it give us a half move higher? Well, it's already done that, and it's going higher. So we're looking for a short-term target about 775 here. And we could resume this trend and easily hit that reversion target. Just as parabolic as this move was bearish, can revert. Gaps do love to close quickly. In the short term, on the 2 hour here, we can see, yeah, this thing just has absolute bullishness in it. But be careful because we're at an area where we can give an accumulation pattern for a couple of days and then continue the trend. So sorry if you missed the move. I did get a note out to a few people, but I wasn't able to put it live on YouTube for everybody. But this thing's kicking butt. And then I'll take a quick look at NEM real quick. Everybody loves Newmont for some reason, and I do too. But I helped my friend hedge his position with a collar strategy, short term for a credit with a calendar spread in it. Long story, but the double bottom is apparent in this thing. They sold off some property, obviously, to have some cash on hand. So equity value may go up for a little while unless they decide to make a quick purchase, which I could see on the horizon. There's been some consolidation from the junior miner sector, so it's a possibility here. I don't read too much into that stuff, but that's just kind of the theme I'm getting from the chart, just physically looking at the chart. Can it hit a reversion target and hit us up back here for 48.60? Sure. In the meantime, we got this double bottom. You got the L1, H1, L2. We're at the mean and we rejected. So look for some consolidation in here. That's why I helped my friend hedge it with a collar strategy, because I'm not so sure this is going to break out and turn around. It does have some downside risk too. I don't know why they sold that property. I didn't read into it. But if things revert this whole trend, we got the low down here. I don't think it'll dump, but it's a possibility. It has done the 1 for 1 up and the half back, and that's where we're at. We're uncertain now, so let's wait and see. If it breaks range.
Earnings. That dump was on earnings.
So they must have had some bad news there. But long story short, I mean, they're still paying a dividend. It's a pretty strong dividend. The double bottom is here. All of this stuff's been capitalized. It did return that half back on that big move here. It's the stock that everybody loves to look at for mining, one of the big ones. And it's in an area of let's wait and see. So start trading some of the ones that are parallel to it. And that's why I went into SSRM, because I put the pieces together and said, hey, yeah, I'm bullish. I have a $9 target on it eventually.
News just came in. Microsoft shareholders do not approve shareholders' proposals for BTC. There was a proposal from Microsoft to diversify into BTC, and the vote shot that idea down.
Cool. Give us the half back.
As far as Newmont, weekly, it's bottomed out on the linear regression, possibly ready, maybe going to do a turnaround here. The MACD, though, is just now crossing the zero, headed south, with not a lot of conviction, but still, that is very bearish on the weekly. On the daily, I think we're probably going to chop for a while, as the linear regression is right here on the zero line. It looks like it's going to try and chop on the zero line for a bit. On the other kind of technicals, the squeeze indicator has come back up to even, but that's not necessarily bullish. It just means it's back to the middle.
Right.
As far as your things like your Ichimokus and stuff like that, there's just no signal here one way or another. And if it does turn back up, I agree with you 100% on the 48-ish, for mid 48s as far as a north target. But I think there's going to be a lot of chop to get there, very possibly.
It's a tough chart.
You gotta have some steel lower extremity stuff here to ride this one out if you're going to go long on this. I don't see anything clear.
And
you do, and that's fine. I don't.
There's resistance at 43. So like the call side of the hedge there for the collar strategy was to sell a covered call 43. His cost basis was well below that, so he's good there. And then the put protection is down the same amount, so it's $3 down from his entry. And
it's below its 200 moving day average, and that's
usually not good.
No, it's not.
So. Yeah, it's a good idea to hedge this thing, and just sit tight. If you want to scalp it later, wait for the move. It'll give you one. Either you get a really nice short right down to support here, down to 29.60, or you get a really nice scalp for a half back up to 48.60. So it's got some range to move. We'll give it some time. In the meantime, there's better stocks to trade, and that's exactly why SSRM popped up to me. It was just perfect. All the stars aligned for that one. All right, quick follow-ups, and then we got a couple of things I'll get into on the themes before we wrap up, because we got about 20 minutes left here. We don't want to drag it out too long. PayPal, yes, sir, made that mark.
Signet's little baby is PayPal.
Oh, that's our baby, man. We talked about this thing months ago.
Y'all? Okay.
We nerded out for an hour on like PayPal and SQ and a few other little financial disruptors like SoFi and so on. And it was easy, just market structure, guys. Sell off capitalization, blah, 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 accumulate for a while, break range, and here we are. We're in the trend zone. If it's going to trend, it'll trend here. First, liquidity target, pretty easy, about $100. If it consolidates here and continues to be bullish, that's where we're all looking. We did get that really nice spike yesterday to 93.66. It quickly sold off and came right back to our current short-term LZ, which is just this block here. I usually have these shaded orange, but it was blinding me on the short-term charts that I was scalping, so I turned it gray. But it's the same thing. So we're looking for support here around $88.20. If it holds that pretty nicely, we've got a pretty good shot at resuming this trend. If it breaks here, well, we just peel our profit off and wait for the next move, guys. Pretty easy. So hang out. Keep an eye on this thing for a little while. It'll give us some more volatility. And as we say, it's kind of the financial disruptor. It's been beat down for far too long. That's why we got some parabolic moves in it. People are starting to realize this market structure's done. We've got a good shot at reverting. Reversion trades are pretty easy to spot. So
December, it doesn't have what you would call a very good seasonality. Does not look so great on it.
No.
For December, it's only got a 66% chance of making approximately 1%, a little under 1%. Your TTM shows back in end of October, it was in the squeeze. It busted out of the squeeze, went parabolically north. Well, not parabolic, but $8 anyway. Yeah, it did nice. But the momentum of that looks like it's starting to wane. Monthly hit the high on the weekly linear regression did peak and is now fading. So, yeah, I think this is in consolidation for a while they try to decide what to do next. As far as does it got more room to go north? This kind of ties some back into the whole crypto thing, too.
Right.
Because PayPal is involved in crypto.
They are clipped into it pretty good.
So, without crypto, I think it's going to go sideways for a while or a very, very slow grind up, which is not a bad thing. But
we're in the trend zone. That's where we would expect a slow grind melt up scenario. And, the liquidity zone short term here, if you look back, this candle here on a weekly 11/18/22, there's a wick on top. That's where we're played to right now. That's where that, previous little pop from yesterday whacked into. So
to the moon,
right?
2085.
But
we'll be there in the year 2085.
My options positions on this thing killed it. I entered it again and killed it more. That doesn't owe me anything.
Selling premium, or were you buying? Or
I was just running some spreads for some swing trades. That was an easy one.
If you follow the trend out, you could maybe do a butterfly, an end of year butterfly around.
I've considered that, rolling some of my
99. Not 99. What is that? 92. A butterfly, end of year butterfly around 92 is possible.
I had December 17th expiration on the recent call debit spreads that I took profit on yesterday. I thought about rolling some of them into butterflies and just selling some credit spreads above them, but then I realized I'd want a little more time if I'm going to deal with that. So I might look at April expiration or something like that and go in there. So I'll wait and see what this does.
Butterfly things. One of the things I've been studying lately, and no conclusions yet, but is doing the trend line, the linear regression trend line, and projecting it into the future so many days, and targeting a butterfly based on that kind of thing. And to see what it does, but that's still experimental right now. But it kind of makes sense if you've got a good strong trend, and PayPal is showing a really nice strong trend right now.
At one point when I first scalped, it was an easy wolf wave trade, so we had this trend here. You get your wolf wave set up here, target here, pretty easy. Target here, pretty easy. Never quite met that range, but then when I build out, and I'll often do this with the wolf wave, when I build stuff on really short-term charts, you know me and my 5-second stuff, you run a regression line and you end up with basically just a set of fans that you can actually use for swing trading too, by the way. Kind of lined up with the 74.95 area where that resistance was, but it never touched it. But then if we split this, we're right in that trend line now. That's where this big bar started from yesterday or the day last week. And, you get into running the fan lines on this stuff, and all of a sudden, there's a magnet. Yeah. So if we break this zone, sure, we get this pullback right here.
Yeah.
Trend goes on. So it's one of those. You can do the market structure thing on it. You can figure out where all the pivots are. You can figure out where all the liquidity zones are. And in the sense of trading the trend's already there. Now it's just at a point where this is likely to run out of gas for a little while and consolidate. So you're right. It's not quite remaining bullish yet. It's got some consolidation to do here. So, but if it holds here and it consolidates for a few days and starts to trend out, we know where the melt up targets are. They're pretty easy. And thanks again, OEC Coaching here. We got Bullish Bears Sig who does one-on-one coaching with OEC. He's blowing up our chat, giving us lots of good stuff in there. So be sure and read that before we sign off here. A few things.
Hello, Signet.
Hello. And then a couple other things to quickly look at for follow-ups. Apple, gorgeous trade. That is just the mother of all measured moves I blocked out here. And halfway target's 250, 260. And we got pretty good strength in this thing. With this news with Microsoft, it might give it a little bit of a boost, so to speak, a sympathetic boost. But so far today, it gave us a really nice 1-for-1 down, and it's given the half back. So it's got a break resistance here short term. We're looking for a break back above 247 here to see anything continue out of this thing in the short term. But consolidate it will. And we know there's some news coming out tomorrow and Thursday, so chances are Apple will be kind of tied to that as general market stuff.
When's their new phone coming out? Don't they have? I know the last phone was a dud because it was just, had one or two about it. I think they got something newer coming out with their next phone. I'm not sure. I'm not an Apple guy, so I don't follow.
Me neither. I'm an Android dude. But the other part of it is the whole tie with AI in it. That could be something big. So maybe we're seeing something here. But the outside look on the big part of the measured move here is just tremendous. I mean, that puts us all the way up here like 282, which is very feasible for Apple to do. We've seen these moves before. It just does trend very well when it does. So be mindful of this guy. I don't think you even need to be nimble. You can just be slow and roll some, you could run some leaps out this way or leap spreads out this way and do just fine. I've got some short-term stuff that I use to pay for some longer-term stuff that I'm going to end up rolling out anyway. But I profited all the short-term stuff off. It covered 150% of the risk on the long-term options position, so I can just let it ride for a little while and see where it goes, or roll it out later. So I'm in a good on that one. A couple of other quick reversions here. We're looking for AMD to do nothing but drop here. Looking pretty bearish.
Poor AMD. I know. I've always had a soft spot for AMD, and I've never had a winning trade on it. Absolutely not.
I have. That short was glorious. Now we're looking for the bigger picture.
I've never had a long trade that was successful.
I've done some long trades on AMD in the past that were very successful, and then a couple of years ago I did a couple of decent bullish trades on it. But now it's like I haven't lost faith in it, but it's pretty obvious charting for me. Liquidity zone, it smoked yesterday. It came back up, opened with a test of it today, and rejectamundo. Half a move down here is 121.30. Pretty easy target.
Whole move. See the liquidity there to the left.
That's it.
Yeah.
That's where the wick is.
That is your half move, too, and everything. Oh, man. I'm talking about the one left.
Oh yeah. This guy here?
Yeah.
That was the big fish. Since it broke that, it was game on.
It's going down to that. What is that? August? Low
this one here.
Yeah, that's where it's going.
That's about a half mark, pretty close.
That's half move. Yeah,
yep.
That's where it's going.
Pretty easy. And a previous accumulation here back in December of 23.
Yeah, you're right. Yeah,
same range.
Confluence right there. There's confluence. So yeah, that's where it's going, I think.
Pretty easy move. That was a no-brainer. We picked that off. This is just following up. We picked that off last week. This is one of our many self-righteous, perfect call-outs from last week. We're just following up on it. And it just keeps on going, man. Let me get into Mr. Tuttle's email real quick here. He had some themes come up, and we need to pay attention here. Hold on one second. There we go. Of course, he's always using the VIX as kind of a way to hedge things. UNG's, doing to put things on. BTU, he mentions, is, and that's one that we had on our watch list last week as well.
British thermal units?
No, it's Peabody Energy.
Gas. Okay, there you go.
Coal.
Coal. Oh, yeah. Okay.
And this thing has been a darling for trading for a long time. We were expecting maybe support to happen around 23 here, and it kind of fell through that a little bit. But then we're seeing a little bit of a sign of buyers here, and we can see there's some previous liquidity here. So let me map out another zone in here, just kind of make it visible. Can we hold in this area and print a nice reversal here? Well, we're going to be skeptical until we're confirmed, but we do have an obvious range.
I do not see it.
At 2240 to 23. Everybody's all like, Trump supports coal. Sure, we'll wait. But if you look back, and this is where I get a little bit counterproductive with this. I traded all this. This was easy, but this was Trump's administration, guys. He was big on coal. He wanted to open the gates and let it be mined and let it become our energy to keep our energy costs down, because you can't have a roaring economy without affordable energy. That's obvious. But that's where she went. Now we're kind of right in a support zone. If it breaks this zone, and Matthew and I are looking to be bullish on it, but if we change our mind, and we can, the bearish move is much more fruitful if it breaks this zone.
I see 21, no problem.
Yeah.
I don't see, yeah.
So 21's easy in the short term, and that's kind of where I'm thinking here is if we break this zone, it's an easy mark. This range here will tell us everything we need to know. If it breaks bullish, halfback's easy, 2468, 2470. Okay.
Yeah. If you put a small order in, and then or whatever, and it turns out to be a good winner, you'll make nicely on it, because you'll go from 22 and a half back to 26 and a half.
Yeah, you can hit the full reversion there, but
I mean, that would be a real good return, even if you just put your toe in it.
But just pay attention to the range, though, too, because like we were saying, if it breaks this range south, the measured move is also much more fruitful. So wait for this range to break. It'll give us a good play either way. And Matthew and I have been watching this for a few weeks now. We're like watching this trend for either a reversal to scalp it back to the bull side, or if it breaks, we can always change our mind. You don't have to be stuck in a bias. You just trade the chart.
What do you got for the low of that?
But this measured move, actually, I'm gonna turn it gray, and I'm gonna zoom out to the daily. So this is where we're looking for, half back, that return to liquidity here, half a move down, right there. So if it continues trending even lower, 1728 and stuff. If, towards the end of the Trump administration again starts to do this again, well, I could start wheel trading it again. Until then, scalp it, just move it. It's got some good trades in it. So just pay attention. This is a range we want to very, very closely watch and just trade the break on it. It's going to give us a move either way. All we have to do is scalp it. Getting into a couple other spots here. Let me go back up the list here. He had one that stood out to me. Well, GDXJ is the junior side of the mining, and that's kind of in line with what we talked about earlier. Pretty similar moves, but this one's kind of already made the half back here. So can it continue to run higher? It's possible, but again, we're looking at the same thing as GDX. It's very similar. And then there's
I think it's closer to its halfback, because it's halfback. I think it has hit its halfback, because you can see the peak here on the night yesterday. Yeah, it was yesterday.
50-53 push.
I think that was roughly about the halfback right there, and so it's just a question of where is it going to go now.
Right. So we'll keep an eye on it. This will be talked about on Thursday quite well. And, we're in the halfback. It's ranging here. We're printing a wedge. It'll either give us a nice 1-for-1 up or break down. We'll wait and see. But keep an eye on it. If it breaks this range, trade the break. Targets are obvious. So we got one at 47.24 for the Bears. Where would the Bulls take it? So let's give this a quick measured move lift. And half a target is breaking previous resistance. We hit about 50.80. And if we push on through, 52 is pretty easy. So, yeah, keep an eye on it. It's going to be probably something we put into the watch list on Thursday, but it's setting up now. So give it a couple days and we'll see where we're at. One that we really ought to look at, and we only have a few minutes left here, so let me get into this. Oracle is interesting. As we've looked at Oracle over the years, we've known that it's always gotten some pretty big moves very handily, and today is no exception, and yesterday is beautiful. We talked about this a while back. I put my self-proclaimed bullish target on here, 196.88. It went to 198.31 and rejected cleanly yesterday, and then it hit right to the bottom of the box. So if it bounces here, a quick halfback scalp is reasonable to like 182.80, 183 maybe. Pretty obvious trade on that one. But look at the weekly chart and realize when we've seen these big red candles, they give very fast little twitchy moves and then give us full measured moves later. So if it rejects that halfback cleanly, we get a really nice bearish scalp back to some of these support levels that we've traded on the bull side. So,
well, if you go back and you look at September the 9th, you'll also notice that when we look at the previous, it's always gone back and looks like it's filled those gaps.
Right.
So this has still got a gap down here around 145, 150 that it has still got to fill. Not saying that it will. That's a huge move. That's a humongous move, and it may just leave that in the dust. It obviously has cleared and filled that gap, 175.
Right.
So yeah, I'd say you're right smack in the decision zone here. I mean, technical indicator wise, it's bearish across the board. It's pretty bearish, but look at these gaps. Like I said, 175. And then again down here at 150. So if it breaks bearish, I'd say we're going down for that. I mean, it'll take a while to get there. It'll take months to get there, but it could.
It never disappoints. It gives us big moves.
But if you look at the weeklies, the MACDs, and all the other indicators, basically say a short-term bearish tone. Short-term bearish tone. So anyway,
and we've accumulated here. It's got that look where if it breaks this 171, it's an easy bearish trade. And Sick was reiterating on that Apple. It's the iPhone 16, same phone, just better guts. It's got the Apple Intelligence supposed to come into it. Okay, so Apple should give us some good volatility and some good moves coming out. I think that's about it today. I don't see anything really else on the radar until after we get these data numbers out of the Fed tomorrow and the next day. We should see stuff start to trend a little bit. Let me take one quick look at LLY, though. Just did we look at that one yet? No. I want to make sure I'm not, talking in circles here. Yeah.
Okay.
I used to have some interest in trading this. It gave us some pretty good moves, but now we're looking, this reciprocal here is pretty simple. There's a, half back move. Looking to touch it today, maybe 795.95 is a pretty obvious one. Look left, though.
Stock split.
This is, you got to kind of take this with the grain of RFK. So half a move takes us for a reversion trade. A whole move takes us to the base of the previous consolidation. It's looking a little bearish for me, but let's play this one by ear and be nimble.
If you kind of squint your eyes a little bit and look at the daily chart, it looks like an inverted head and shoulders.
Yes.
You got to squint your eyes a little bit to see it, and I'm not sure that the right shoulder is formed yet.
You know how I squint? HA candles.
Yeah. There you go. Okay, so there you are. You can see the right shoulder forming with your red candles. So, yeah, this is obviously you've got your break line north at what? Somewhere around 850 to break out of this pattern if it's an inverted head and shoulders. If not, you know, I got a lot of mixed signals on the board with this one from the technical side.
It's hard to read. I've kind of lost my interest in trading it. The only thing I do look familiar on, though, is this big descending, broadening pattern on the daily chart as well. And that usually gives us a range break. I'll draw out the trap detector on it and everything later, but it's pretty obviously nice, big, broadening, descending channel. And typically when those break, they break hard to the north. It is an inverse head and shoulders, but short term, I'd scalp the quick bear moves on this thing and wait and see what the rest of the game provides. We're a little bit over time anyway, but I'm going to look at one more real quick one that Sig put out there just real quick. CPNG. What was that about?
CPNG.
Bullish earnings outlook. Flat.
What is CPNG?
Never mind. CPNG. Earnings are poor and flat. That wasn't the one I meant to look at. Above that, DASH. Never mind CPNG. It does.
Who?
DASH.
DASH. Dash.
Hey,
DoorDash.
there we go.
Yeah. DoorDash. Yeah.
That one never really gave us market structure to speak of other than just a choppy couple of 1, 2, third impulse break trend now. So it did market structure just really fast. And then reversion targets abound. Well, now we're looking at, let's compress the chart a little bit here. We're probable to push. Can we hit 220 and give us that's not the 86.6, that's the 76.2 or whatever the hell the fib is for that. But easy. Look left, find a big candle, make bar. Bing, right there. So let's see what the measured move says on this for the daily.
I really don't like that gap at 160. I do not like that gap at all. That is weird.
Yeah, it is a little off.
That is really not okay. It's earning. Oh, okay.
It's got earnings hype coming up. So
no, wait. The earnings was the big red candle, and then that oddball gap in the middle. That's strange looking. Anyway, okay.
All right, give me a vote. Do you guys want me to leave these purple and blind everybody, or turn them gray?
They're fine. They're fine.
I like gray just because I love that purple on the black background. It looks great. But when you zoom in on a 5-minute, it sucks. Then your black background turns purple.
Weekly, I see an overextension. Intraday, I see a little chop for a short period of time, and then maybe another bullish move. But we are in a squeeze right now. TTM squeeze is triggered right now and shows a little bit towards the bearish side.
Well, indicators aside, I mean, you do have earnings. So we got a pretty parabolic move behind us. We do have consolidation. Half-back target is either going to be 148 for if earnings are bad, maybe a little lower and push the previous resistance here. Or if we get a big old bull move, 203. That might be a good earnings call to scalp. That's a pretty broad move. I remember back in the day when Amazon was trading at like $3,000 a share. When I worked in Montana, I timed my lunch break for Amazon earnings because I was, 2 hours ahead of market time. And it was fun because I would go and just scalp the earnings call and know where those ranges are by looking left. And, you make $400 or $500 in like 5 minutes. It's pretty cool. And one share, by the way. Sweet. That used to be one of my favorite things to do. Just scalp the earnings call on Amazon during my lunch break. And
that was insane. And the options, the options was
it's ridiculous.
I mean, they were $30 at the monies were like $30 and stuff like that for 1, 2, 3 days out. You're like, what?
as big as that was, it still was not attractive to me as a wheel trade, even if I had the capital at the time, because the percentage yield is where I look, and it didn't even get to like 4%. I was like, really? Damn. Well, okay, not worth my time. But yeah, the moves were great. So it was just to me, it made sense to trade the equity. And I used to day trade. What the heck was that one? The Eastern and big old real estate company is trading around $3,000. Same deal. You just trade 1 or 2 shares and just scalp the equity. It's an easy one. But when it comes to options, it just never made sense to me to really trade options on Amazon until after the forward split. Once that forward split occurred, I was like, yeah, this is gravy.
Yeah.
Now we just trade debit spreads on it all day long. But, you get the idea. Anyway, I think this is a good wrap. Thanks for coming on with me, Marziti. It's good to have,
Sure.
I like to keep things diverse when I can. If Matthew's not available, I like to kind of fill shoes with someone with a different approach. And I love.
Oh, yeah, I'm definitely diverse.
Yeah, your approach it's like not necessarily all over the place, but you keep mind of a broad spectrum of indicators, and it's always handy to have. And I always encourage people to learn as much of that as you can, and then for yourself later on, simplify it, and then having all that stuff where if everything aligns, every way you look at it aligns, you end up getting more and more accurate with your trades. And then it makes it easier to simplify things as well. So you kind of kill 2 birds with 1 stone that way. You diversify your knowledge base, you diversify your analysis technique, and you can also keep it simple and understand that you can have a little more confidence in keeping it simple once you learn all that stuff. So it just confirms what you already know.
Mm-hmm. Yep.
So good to have you. And
I enjoyed it.
And I enjoy keeping this open. So occasionally, sometimes we'll have 3 of us on here. So we'll just have a guest spot. I'm going to shoot for that on Thursday. We're going to get Greenberg and Tuttle in here and have a blast. It'll be a party. I might even see if these guys will do a shot with me. Just kidding. I don't do that in a day. We'll have a party nonetheless, though. So we'll see you guys then. Thanks again for joining us. Don't forget to like and subscribe. And, of course, tell your friends. We love helping people. We love helping people understand how to make educated decisions when it comes to trading and investing. And we're here to actually help. We love it. It makes us feel really good that we can help people. Even if we only help a few people, we're still happy. But tell your friends, help us grow. The more we do, the more followers we have, the more we can get out there to a bigger audience, the better it makes it for everybody. And we'll just find more time to do it then. Thanks again, guys. Have a great week.